Commercial real estate videos are brought to you by Bull Realty. When your business requires proven performance, contact Bull Realty. And by Arnold Golden Gregory, France Media Inc., Resnick Group, and Andy's Army. Welcome back. I'm Michael Bull, and this is America's Commercial Real Estate Show. If you would like to know the absolute latest on any commercial real estate related subjects, check out our show podcast. Last week, we covered the U.S. retail market. 2 weeks ago, we explored the unique factors in the current market affecting whether a company should lease or purchase real estate for their business. And be sure to catch the show, Oops, I Should Have Covered That in the Lease. There are lots of interesting shows to choose from. You can find them on iTunes or just click the tab Shows on Demand at commercialrealestateshow.com. Well, today we're getting an update on the U.S. industrial market. Please welcome Mitch Roschelle, partner, U.S. Real Estate Advisory Practice Leader with PricewaterhouseCoopers. PwC is a global professional services network with 169,000 professionals worldwide. PwC is the leading professional services network in the world as measured by revenues. Mitch Roschelle, thanks for joining us in the studio today.
Thanks, Michael. It's a pleasure to be down here in person.
Yeah, glad you could come down to our fair city.
I love it.
Well, guys, let's look at the U.S. industrial market. Mitch, what type of performance did you see in the first quarter?
I think, as I said last quarter, and thanks for having me back,
Yep.
I guess I did a good job.
You did.
We're seeing improvement. And as covered sort of in the first segment by Reese, a lot of that's driven by the fact that investors are trying to look past apartments as the most favored asset class. But you have to step back and look sort of at the underlying fundamentals. And there's an interesting chart that I think we can put up, which is an amalgamation of data from CBRE Economics and Moody's, but it shows that industrial production is improving, and at the same time, as a result, we're seeing an improvement in the demand for industrial space. So when the blue line on that chart, which is industrial production, is higher than the orange line, which is the demand for space, that's when fundamentals are improving. And I think we're seeing that bear out in cap rates. We're seeing that bear out in rent growth. Another index, which is interesting, which is the Institute of Supply Management, the ISM index, grew again in the last measurement period. And anytime that index, which is now 53.4, is greater than 50, that's a telltale sign that there's an improvement in management, in industrial production. One last thing, if you look at the job growth, we still have this tremendous chasm of lost jobs in America, and we still have a unemployment rate of around 9%. But if you look at the most recent jobs statistics, a lot of those are in manufacturing. So those are the underlying drivers for why we're going to have goods that need to be stored in warehouses, and that's good for the industrial sector.
Yeah, that's a good sign for the market. And Mitch, what do you see when you look at the market overall? Are tenants making decisions based on election outcomes?
I don't think so. One of the things we've done at PwC in our real estate research group is to look at election results going back to perhaps the Truman administration and real estate value data and real estate performance data to see if there's any correlation between conservatives, liberals, Republicans, Democrats, independents, Green Party, Tea Party, what have you. And there really isn't a story. I think it's more about the real estate performance is more about what's going on in the macroeconomy. It's more about job growth. It's more about underlying fundamentals for the asset class and not so much about who's in power as it relates to the way real estate has performed over time.
Okay. Well, Mitch, what about gas prices? Are they affecting logistics and tenant decisions, or is it more based on product demand? What's driving these decisions?
I think gasoline prices are something you can't ignore. It impacts the consumer. It impacts companies. Interestingly enough, we're coming off of a strong period of corporate earnings, and oil prices have largely been up for that quarter. So it doesn't look like corporate earnings have been hit. So as it relates to tenants, I don't know that it's killing them. But when you think about the cost of moving products that consumers buy or moving products that are part of the supply chain across the country, the notion of sort of nearshoring, the notion of putting products closer to where the customer is, I think are going to be important. And I'll give you a little bit of an example. You go into a big box retailer and you decide you want to buy a big screen television, but then you pull out your tablet and realize you can buy it for $150 cheaper online. The problem is you walk out of the store with nothing, but you want that big screen television. So you order it online and maybe even stand in the store and you order it, but you want it to come quickly. Well, if it's in a warehouse that's 2,000 miles away from where you live, you're not going to get it quickly. So what happens is we have to move those warehouses closer to where the people are. So in major metropolitan areas, I think you're going to see over the course of the next year and a half an expansion of consumer-based warehouse space.
Right. Well, that makes sense. Well, after a short break, we'll get more from Mitch Roschelle and Greg Herron. If you appreciate the show, reach out to our show sponsors. I'm Michael Bull, and this is America's Commercial Real Estate Show. We'll be right back. Commercial real estate videos are brought to you by Bull Realty. When your business requires proven performance, contact Bull Realty. And by Arnold Golden Gregory, France Media Inc., Resnick Group, and Andy's Army. Welcome back. I'm Michael Bull, and this is America's Commercial Real Estate Show. If you like more great commercial real estate information, follow the show on Twitter. The accounts are at Bull Realty and at CRE_show. Are you in any business related to commercial real estate? Well, help our listeners connect with you. Post your services and your contact information on the show's free professional directory. You can find the directory and the Twitter accounts at commercialrealestateshow.com. Well, today we're getting an update on the U.S. industrial market. My guests are Mitch Roschelle with PwC and Greg Herron with Seafried Industrial Properties. Well, Mitch, how do you expect this to affect the market? What type of performance do you expect to see the industrial market this year and moving forward?
We publish at PwC a real estate investor survey quarterly, and aptly named the most recent quarter, encouraging trends revive investor interest in industrial assets. So I think that sort of sums it up.
I like the encouraging.
Anything encouraging is good. So sort of back to fundamentals. If you look at supply and demand, and I apologize to those listeners in their car that can't see these slides, but when they're posted on YouTube, you can come back and rewatch it. Yep. But, we're seeing there was this trough for years in terms of new additions to supply. As a result, you had negative absorption happening at the same time. And what happened, the availability rate or the vacancy rate spiked. But we're now seeing that turn considerably. And we have, this protracted period of time where we haven't added to new supply. So what does that do? That's going to drive rents, and I suspect I'll talk more about rents. Wanted to touch on cap rates, though, and it's something we've been tracking for 25 years in our survey. But cap rates are sort of really interesting because we're now at a 7.4 cap rate for the national industrial market, and that trend, really sort of spiked as a result of the recession, but it's come down precipitously since the recession, by more than 125 basis points, and this is happening quarter after quarter. So it's a steep downhill slide in cap rates, and cap rate compressions. Some of it's clearly driven by the fact that fixed income instruments, based upon the Treasury, are at a historic low. So anything that's income producing, real estate's an income producing asset class, is going to get dragged down by the lower interest rate environment. But it still tells you that investors want the asset class. And I think one of the challenges, and Greg, you may have the same point, one of the challenges that as I talked to a bunch of investor clients in preparation for this segment, they're almost encouraging me not to be so bullish on the industrial asset class because they wanted to keep it the best kept secret in the real estate industry because you can't seem to find product. So that may be the cap rate. That may be the inflection point in which a deal makes sense from an investment perspective. However, it doesn't necessarily mean that you can find the property to buy. So we've got rents going up. We haven't added to supply. We've got much improved fundamentals driving cap rates down, yet you can't find a seller that wants to sell the property.
Okay, we have to take a quick break. I'm Michael Bull, and this is America's Commercial Real Estate Show. We'll be right back. Commercial real estate videos are brought to you by Bull Realty. When your business requires proven performance, contact Bull Realty. And by Arnold Golden Gregory, France Media Inc., Resnick Group, and Andy's Army.